Well, hello everybody. Blair Nightingale here. Welcome to Market Monday. YouTube friends, Facebook friends, we are on with you 6 p.m. Central every single week, kicking off another week right here on Tradeway TV, helping you guys understand what we do over here at Tradeway in the markets, specifically giving you guys understanding. And I'm pitching tonight, essentially, right? I'm saying for the week ahead, we not only do Market Monday, but we've got Tip Tuesday, Word Wednesday, and then we've actually got live trading on Thursdays. So the whole week has programming for you guys to join and understand how we approach the markets technically, right? Good information for you guys to understand. Nobody cares about your money more than you do. So let's make an investment in you so that you can steward your money better, right? Wisdom or knowledge is better than gold, the scripture says. So we want to seek wisdom. In fact, Proverbs says to seek wisdom as silver and gold, right? Silver and gold is not our God, but it is something that we use, and it is powerfully used in our lives. So we want to understand how to steward that better. We do that through wisdom and knowledge. That's something we try to achieve right here on Tradeway TV. And that's why we have an assortment of different programs for you where we're going to focus specifically on the markets, but we're also going to focus specifically on developing our spiritual lives as well, right? That is something that we want to do here. That's very, very important to us. I can see people coming into the program as we speak. And as always, you can go ahead and drop a comment, Facebook, YouTube, wherever you are, drop a comment in there for us to see on this side. I'd love to answer your questions. Just say hello. Let me know you're here. We've got some longtime friends joining us on Market Monday. You guys have been with us for over 2 years. And then we've also got new people every single week. Many, many people will watch this by recording. So I'm speaking to a broad audience today. So thankful to have all of you guys here. Today, I love the topic we're going to look at today because it is something that in the trading world, in the investing world, certainly on the YouTube world, day trading in particular is a highly sought after topic, right? And I'm going to talk a little bit about why that is. Primarily, day trading is the first thing that comes to mind, whether we even know anything about day trading or not. One of the first thing that comes to mind when we are not talking about investing, but we're getting into the trading side. We focused on this the last few weeks here on Market Monday, where we're not on the investing side, buying and holding a stock, but we're talking about trading. This is something I hear a lot of the times when I'm traveling around the country on weekends training people. Oh, you mean day trading, right? And I go, nope, actually, right? Actually, I'm not always talking about day trading, but that is sort of the default. It's a thing. You know, we've got the picture of the trader with 6 giant screens and all these graphs and indicators and all these hotkeys and things going on. That is more the picture of the day trader. Okay, we're going to talk a little bit about that. There are different kinds of trading. In fact, we talked about this in recent weeks, where the long-term side we define as long-term investing, right? We are investing. We are investing in that company. We want to buy it. We want to hold it. From a tax standpoint, long-term capital gains tax, or just long-term tax on investments in stocks, right? And options, things like that. That's a year or longer. Now, around here, we would define something more than 2 or 3 months as long-term. But from a tax standpoint, a year and longer, that's a buy and hold investment. In the middle of the road is what we would call a swing trade. Okay, now I'm reviewing quickly. We're not going to go into this in too much detail as we've covered it recently, like I said. But swing trading is really looking for those swings in the price action of a pattern. And that can get us trading anywhere from 2 days to 2 or 3 weeks typically. Something that we would call position trading, where we're doing something a little bit longer, where we might be looking at 1 to 2 months. But really, it's that 2 days to 2 or 3 weeks that really is the sweet spot for the swing trader. Lately, it's been a little bit on the shorter side for swing positions just because of the volatility of the markets, okay? But what happens if I get into a trade and I get out of a trade in a single day? right? I'm not even going to hold it overnight. I'm going to get in and I'm going to get out in the same day. Well, that's what we call a day trade, okay? And there are implications for anybody who's trading with an account and you execute day trades. There are specific requirements that the SEC and of course as an extension, brokerage firms will put on us as individual investors and traders. I call it retail traders, right? That's you and me. That's what Wall Street calls us. That we need to know about. So I want to talk about this because, again, it's a very popular topic because it's the most understood one in terms of what our mind goes to first. Oh, day trader. But it also carries with it or I should say, one of the highest return potentials, right? You may buy and hold a stock for a year and make 5, 10, 15, 20% on the stock on a really good year. A typical long-term portfolio, the S&P has returned about on average 10% a year for the last 100 years, right? 10%, 8%, 12% on a portfolio over the year, right, is a fairly consistent benchmark. Doesn't mean that happens every year. Some years are better, right? 2021, the S&P 500 returned over 20%. Okay, last year it lost that. So there are exceptions, but on average, between 8 and 12% for a portfolio is pretty standard, right? Right. So if we're not getting that, then we are not happy with our results. And if we're getting above that, then we typically feel like we're outperforming the markets, which is what we want for a long-term portfolio. Now, where am I going with this? You could get a position in a day trade that has double or triple digit returns in a single day. Now, could you have double or triple digit losses? Sure, you could. Now, in a day trade, you can only lose 100% of what you put in. You can't lose more than 100%. Could you make more than 100%? Sure, you could, because theoretically the stock or the option could go up infinitely. It can only go down so far. But the point is that you can have massive gains in a day trade. You can also have large losses in a day trade, and it can happen very quickly. And that is part of the attractive nature to, I'm going to say, uninitiated investors and traders or new traders, because the potential for extreme or fast gains is high. The problem is that we don't always understand the risks that come along with that. We like to say around here at Tradeway all the time that professionals manage risk while amateurs chase profit, right? You say, well, isn't every trader in this for profit? Isn't a professional trader in this for profit? Sure they are, but they understand that having the proper root system is what promotes the fruit system. This is true anywhere in life. Proper root system, proper fruit system. Most of us will pursue the fruit at the expense of the root. For the trader, this means we understand the mindset of a trader. We have the skill set of a trader, which of course is what we're teaching here at Tradeway all the time. When I get that correct, right? Process over profit is what you'll hear a lot of professionals talk about. Once they finally realized the process is way more important than trying to focus on the profit, that's when they began to actually consistently see the profit. Chasing the profit at the expense of the process usually results in inconsistency, breaking even, or consistent losses, right? Because the disciplines that are required for trading are unique. Now, what happens in day trading is those things are heightened because the time frame is much quicker. So I want to have this conversation. The opposite side of that is that some people are afraid of day trading. If some of us have been investing for some time, if we have been swing trading, My goal today is not to convince you to day trade. That is not my goal today, right? Most of us will not day trade. However, I do want you to understand what it is, and there's really no benefit in us being afraid of it. Some of us may have an account, we'll get into a position, and for whatever reason, you'll need to exit the position the same day. It maybe wasn't your intention as a swing trader, but it is possible for there to be market volatility that can create a loss that you're going to stop out by the end of the day. At the same time, though, it's not always a loss. It may be that you have seen such a significant gain in a single day that you'll exit the trade in the same day. That is technically a day trade. Now, while you did not intend to enter that as a swing trader, you can do that without anxiety or fear. And I know I'm speaking to some swing traders out there who've learned, oh, I'm not going to start by day trading. But over time, it can create this intensity or anxiety around day trading, which I don't want that either. I want us to just understand what it is specifically, have some knowledge about that. At some point in your trading career, you may choose to do some day trading. And like all trading, this requires practice, time, discipline. We recommend doing everything with a paper trading account before we ever do anything with real money. And even then, we recommend doing that with a very small amount of money until we are achieving consistency. And then we're bringing it up from there. Okay. Charts by Tradeway, which I'm going to show you in a minute. We've looked at on Market Monday many, many times, has its own software that builds in a paper trading account so you can trade right from the chart. But all that to say, at some point, you may look at doing something like this. Tradeway does have some advanced strategies that are very, very specific. We don't teach a lot of day trading. In some ways, we don't teach any day trading, but we do have some positions that are around news, volatility, and things like that that fall closer to the day trading side. So we're not really afraid of this here, even if it's not the primary thing we do when we're teaching folks how to do this. This is not a skill set for beginners. Okay, this is not a skill set for beginners. And I'm going to explain more of that. First off, though, I want to pop this up on the screen. Mark is saying, hey, in Salt Lake City today. So Mark is on the move, and Teresa joining us from San Diego as well. If you guys are out there and you want to say hi, don't forget, you got that comment box there. You can drop in a hello, a question, a comment, a concern, whatever you want. Go ahead, throw it in the box there. I would love to jump on that for you guys. And it doesn't necessarily have to have anything to do with day trading either, right? Anything trading or investing related, the other people who are on this broadcast who are watching by recording, they're going to benefit from your question as well. So go ahead and pop that in there. Now, as I mentioned already, day trading, how do we really define that? Day trading is defined, okay, technically speaking. You have entered and exited a position in a single trading day. So here in Texas, Central Time, right? Markets open at 8:30 a.m. and they close at 3 p.m. That is the trading session. It's possible to have extended hours a little bit before and a little bit after, but for our purposes today, we're not focusing on that. Regular market hours on a day when the market is open, right? The market was closed observing Good Friday last Friday. But other than that, we've got 8:30 to 3 o'clock. That's a single trading day. If you open a position and close a position in the same day, that is a day trade. Okay. Yes, Travis, I see your question. And it's a great question. I'm going to pop it up on the screen, but we're going to get to that in just a moment. Okay. So I'll come back to that. Love it. So that's a day trade, single day. Now, there are different kinds of day trading. Day trading can really be broken down into two basic categories. Day trading, where you enter the position and you hold that again and you just close it at some point in the day. It's not necessarily that you're in it for a very, very short amount of time. You may be. And for most, in a single day is already considered a very fast time frame. But what we would call scalping, scalping, where traders are attempting to profit from very small movements in the underlying price, whatever the stock might be, right? It could be Apple stock. It could be any stock. where you're looking for a very small amount of movement in the stock, but you're actually using leverage. Typically for a day trader, they're leveraging in some way so that they can use a larger portion of capital to be profitable on a small movement. Okay. So that is something that we can do if we have a margin account and we're doing that kind of thing. By the way, I'm just going to continue to stress this today. We actually don't even teach that students trade on margin. We do use options. Okay, we use options, which is a leveraged instrument in and of itself. Okay, but we don't trade on borrowed money. Whenever I say this, or somebody asks me a question about opening a cash account versus a margin accounts allow us to do certain things with options that we cannot do in a cash account. So we do that, but we're not borrowing money. Now, there are leveraged instruments out there where, something like the futures market, which maybe we'll go into the futures market in another day, highly leveraged instruments that are popular with day traders because they can commit a very small amount of capital and have a very big amount of capital to trade with. What's the risk though? You can lose a lot of money doing that. All right. So I'm not suggesting today that our purpose is to go out and highly leverage your account. What I am saying is that is fairly typical with a lot of day traders. Okay. So if you go into the actual brokerage account here, I will close that guy up on the screen. As we go into this here, you'll notice on the chart, okay, we are looking at a daily chart. This is a daily chart, meaning each one of these candlesticks is showing a day. We're looking back to last October here on this chart. Every single one of these candlesticks, if I zoom in a little bit, this is the XLE energy sector. Let's go over to the S&P 500 here, is a day. Now, can I change the time value of the chart? Sure, I can. I can go over here, click on that. What I'm going to do is I'm going to select out of this menu here the full view, right? How much time do I want to see in the entire screen? Let's look at, let's go 3 days of data. So the whole screen will be 3 days, but each candlestick will be 5 minutes long. So now I'm seeing 3 full trading days. Now we were just seeing over 6 months of trading data just a moment ago. Now I'm only seeing 3 days, but every candlestick is a 5-minute chart, or excuse me, a 5-minute candle, right? So what that does, I'm even going to go, now we're going to look at a week time with 5 minutes. Okay. And I've got some lines drawn on the daily chart that are actually showing up here. So do price patterns that show up on a daily time frame show up in a shortened time frame? They certainly can. They certainly can, right? So this is how you get a picture where day traders have these different screens, right? They may be looking at a daily and a weekly and a 15-minute and a 5-minute and a 3-minute and right, an order screen. There's all kinds of tools that they use. And today the purpose isn't to so much go into the nitty gritty, if you will, the specifics of how a day trading system works. But that's where you get that picture where they're looking at all these other screens. And this is what we do when we get to swing trading. We can remove a lot of that intensity where we don't need to be looking at all those different things at one time because we've slowed it down, right? We've slowed it down to a swing position where we're going to hold that stock and we're not going to have to react so quickly because we're looking for a longer movement anyway, right? So when we talk about day trading or even scalping, which is a kind of day trading, we're talking about the most skilled, the most disciplined form of trading that many traders will attempt to do, but it takes a lot of time, a lot of practice, a lot of discipline to be able to really grow that skill set. And we start with a swing trading approach because it's much safer. It's much more conservative in many ways. Of course, it depends on the kind of trading we're doing, But in many ways, generally speaking, it's more conservative. And this is why, to the question, let me shrink the screen here for a sec, that Travis has, this is why this even exists, right? Travis says, hey, Blair, love the content, which is awesome. So glad to have you here, Travis. Can you go over the changes that are made when your account becomes considered a day trading account? Okay, well, hold on. Let's take a step back here. What do you mean trading account becomes a day trading account, right? If somebody asked me that question, well, the thing is that even though you don't ever go to a broker and say, I'm opening a day trading account, right? There are capital requirements to margin accounts, okay? Margin accounts that do more than 3 day trading positions in a 5-day period. So let me say that again. If we open a margin account and we have more than 3 day trades in a 5-day period, that does not include weekends, that's 5 trading days, then we'll get what's called a pattern day trader flag, or a PDT. Okay. What that means is the broker by law is recognizing this account is now in a pattern day trader status. They are executing, whoever owns the account, myself, yourself, right? You're executing day trades in a patterned fashion. You didn't just do one here and one there. And like Blair said, actually my trade went up really far that day and I got out in the same day, right? Am I not allowed to do that? No, of course you are. You're allowed to do that. And that's good. You should be allowed to do that, right? If it's going down and you want to get out the same day, you can do that, right? You have the ability to do that. And that's a good thing. But if you're doing that consistently, they're going to flag the account. It's not a bad thing per se. But if you're doing that consistently, they are going to go, okay, if you're going to day trade in this account, you are going to have a minimum balance of $25,000 capital, and you're going to have to be approved for that. You're going to have to maintain that balance in the account. Okay. This is something that is required by law. So when Travis says, can you go over the changes that are made when your account becomes considered a day trading account? That's what it's going to be. You're going to have a capital requirement. This is not true for a cash account. It is true for a margin account. Okay, a cash account will not have a pattern day trader, but a margin account will. Now, the risks in either are still the same, okay? But you're going to have that in a margin account, right? Teresa says elsewhere here in the chat, I'm scared to trade on margin. I've done it for last minute decisions, but I pay it back right away. I'm not going to tell everybody on here today that you can't trade with margin. Ultimately, you get to do what you want with your money. But I want you to understand, when you trade borrowed money, you have to pay that money back with interest. That's what borrowed money is, right? So you're leveraging your position. But remember that if you take a position and you take losses on that position, you don't want to be taking losses that are more than what you have to pay back. I do not recommend trading on margin. I do not recommend day trading for people who do not have a training and extensive time of practice and coaching and mentoring, so that you have an idea of what these things really are and you know who you are as a trader. That is very, very important. So you want to make sure you have that in place. Back to Travis's question regarding the day trading account. If you are not trying to be a day trader, and you do end up getting a PDT, a pattern day trader flag. I have had it happen to me more than one time. I have. Okay. What's going to happen is the broker is able to reset that once in a 90-day period. Okay. Once in a 90-day period. So you just go in, you request it, it's reset, you have access to your account as if nothing happened, right? You didn't break the law if you do 3 in a 5-day period. Okay. It just flags the broker and says, okay, now we have to put those capital requirements in place. But we'll get you one free, pass go essentially, right? Where they just reset the account. Though, if you do another day trade, however, in that reset period, then your account will be locked for 90 days, right? They will lock it for 90 days. So how do you avoid this, right? You just don't do 3 in a 5-day period, right? And in your broker, you'll be able to see how many of them you have done, okay? It won't show directly in Charts by Tradeway if you're using Charts by Tradeway. If you look in your broker, now we should be able to track this, guys. We should know, especially when we're new, right? We shouldn't be doing so many trades that we can't remember whether or not we did a day trade or not, right? We should be starting low, starting slow. I don't mind being aggressive. I don't mind being assertive, but we should know and have some way to track, whether it's just in your broker or in a journal in Charts by Tradeway. You can go in and you can look and say, all right, this is how many day trades I have. Okay. So you want to remember that. If you have 2 in a 5-day period and you're about to do a position where you might have to stop out today, keep in mind you can do 3. 3 is okay. It's when you exceed the 3 in 5 days that you'll get that flag. Okay. So we don't want anybody getting locked out of their account. So that's important. Teresa, I'm brand new to trading, but I've invested in stocks, never traded except to exit a position, right? So this is something that's going to be more on the extreme swing to the other side when we're talking day trading. We're going to use those smaller time frames. We're going to use technical patterns. This is entirely based on price. Now, there are many different ways to approach day trading, but it's really going to come down to price action. It's not really going to be fundamentals. This is a way some traders capitalize on news and things like that. There are many different ways to trade, you guys, okay? But there's something that we've put together that we go, okay, this is really how we can help people who don't know anything about the markets or don't know much about the markets, or really just want to take their skills to another level in an environment that isn't quite so extreme, but still seeks to get more gains from the market than they may be getting just in their long-term accounts, right? Which, by the way, and I've said this also in recent weeks, we're not suggesting that short-term trading fully replaces long-term investing, okay? We're really not trying to do that. We want both, but they really can complement each other. Day traders still must have a system. They must have rules. They must understand the disciplines of trading and the mental requirements of trading, right? We have to have discipline as traders. And that is no more, I should say it differently, that is certainly no less true when it comes to being a day trader, because the potential profits which many new investors seek to chase without learning the disciplines of trading, having a system, entry, exit, stop outs, what defines an opportunity for you? When has that opportunity left the market? When is the news volatility too high? When am I personally not mentally or emotionally in a place where I should be trading? These are all things that are part of the swing trader's approach, but they are significantly heightened in the day trading environment because I'm going to say primarily the time frame is fast. You're getting in and getting out very quickly. It does not allow for much space for the individual. It also requires that an individual is in front of their computer, right? Day traders are stuck looking at the computer. It also requires that the trader be able to accept losses that happen quickly and are able to manage the emotions that come with the potential to make significant gains quickly, right? It is something, again, both of those that contrast that I just described. I don't want us to be too afraid. I don't want us to be greedy. And the potential for the fear and the greed in the day trading environment becomes significantly bigger. Now, I know some people who are just very gifted. Honestly, there's no other way for me to put it. They are gifted in this environment. They are wired this way. And that is true for traders. I've noticed this with traders. But most of us, myself included, by the way, have had to go through a significant amount of process learning ourselves. Now, when we have a system, when we follow the system, it helps tremendously. but we still have to learn ourselves as a trader. Day trading is not a good environment to learn that in, okay? It's not a good environment to learn that in. So we have to understand that even though there's a high potential for reward here, there is also a high risk to capital, which, by the way, is why that $25,000 minimum is there for margin accounts, right? Now, I know I'm finding my words to say this, guy. I think some people would say we don't need the pattern day trader rule. That's not really the government's job. That's up for debate. But either way, it is definitely in play, right? So that is something that we would have to reckon with one way or the other to be able to trade in that kind of an account if we're going to do day trading, right? We're going to have to do it. It is what it is. It is there. And as swing traders, we just need to keep track and avoid that, right? So this is where trading moves into purely price. And it's definitely something that is going to demand more of us. It's not a great place to start, but it is something that's important to understand. And at some point in your career, you may move a small portion of your capital to speculate in some kind of day trading or something like that. But we need to learn how to specifically do that. I know I'm speaking to students today who are in the program, but I'm speaking to some people out there who've never done anything with us. If you haven't yet, learn the possibilities and the potential that you have for your money. You can start with any amount of money. You can start with a very small amount of money. In fact, in our program, we're going to ask you to start with a very small amount of money after you've practiced our system with monopoly money, right? The paper trading that I referred to earlier in the program. If you've not done anything with us yet, please go on over to tradeway.com. You can always find us right there, tradeway.com. Events, step 1, start your journey. That is our introductory course. It's right on that main page, and you can join up for the next step 1 2-day class that we have. We're going to give you 2 full days of training. And if you come, you spend the time with us, and you don't think it was an incredible way to spend 2 days with us, you get your money back, right? So come on in and learn what you don't know. And that's how I'm going to close tonight. I tell people when I meet them all around the country, do you want to know what you don't know? Or would you like to stay in a place where you don't know what you don't know? Because I promise you, there are a lot of things available to you and me as traders in the market that Wall Street has been using for decades. And the only reason we aren't using them is because we didn't know what we didn't know. And as I always say, when you come to know what you didn't know, you can go where you didn't know you could go. And that's what we attempt to do here for your money at Tradeway. Thank you so much. We're just breaking through 30 minutes here tonight. This is a basic overview of day trading. What is it? What's the difference? Yes, there are major benefits that are possible. We just have to understand that that always comes with risks. We need to learn a system. We need to have very good discipline, good mindset, meet those capital requirements if we're doing it in a certain way, and really come down to the understanding and experience that we have. Swing trading, much better spot for us to start. We're going to continue that journey right here on Market Monday as we go ahead from here. Next week, I'll be back at 6 p.m. We're going to continue along in our series. To everybody who jumped into the comments there, thank you so much for being here. Appreciate all you guys as always. And I will see you guys next Monday for another Market Monday. Tomorrow, Tip Tuesday, taking us into the rest of the week for Tradeway TV. Appreciate you guys as always. And